Faraday Future, the electric vehicle manufacturer, continues to face a lot of obstacles and challenges on its path to production, let alone profitability of FF91. The company recently encountered another setback as its interim finance chief has resigned, resulting in the announcement of restated financial statements for 2022 and the first quarter of 2023. Faraday Future has also made changes to its financial leadership team. So, we're going to take a deeper look at what's going on and what should you do, if anything, about this company. Faraday Future appointed Jonathan Morocco as its new interim chief financial officer, effective on July 24th. This follows the resignation of the predecessor who will now serve as the chief accounting officer. The change in financial leadership comes around when the announcement was made that the company's annual report and the quarters ending on September 2020, like basically from September of 2022 to March of 2023, should not be relied upon because of material errors to the fair value conversion of some notes. Despite the need for restated financial statements, Faraday Future has assured stakeholders that its vehicle's delivery timeline will not be affected. Now, this is a big commitment, mind you. It aims to basically alleviate concerns among investors and potential customers that they will be able to maintain the delivery targets, which is very crucial for the company's reputation, the market position, and also its survival, plain and simple. These recent developments add to the ongoing challenges facing Faraday Future, because in order to address their financial struggles, the company recently also secured a $90 million funding commitment from their existing investors. In other words, I want to say dilution. Additionally, Faraday Future announced the intention to raise additional $100 million in debt. So these measures aim to provide the necessary capital in order to, well, they said to navigate, the company's financial difficulties and sustain operations. But that's basically to say in order to keep the ship afloat, right? In order to make sure that Faraday Future has enough money to pay everyone. That's about the long and the short of it, really. Faraday Future's announcement of restated financial statements and changes in the financial leadership also reflects in the company's ongoing challenges. While the restatement may have some impact on the investors' confidence and transparency, the assurance of maintaining the vehicles also provides somewhat of a reassurance. But Faraday Future must also navigate its own financial struggles to ensure the long-term sustainability of its affairs. The recently secured funding commitment and the planned debt are steps in the right direction, but the company also faces significant hurdles from its own past. Investors and industry observers will closely monitor the company's progress and to see whether the company can really overcome its obstacles. So, with that being said, let's take a look at the technicals. The trading volume of Faraday Future is around 35 million shares versus the average volume of 94 million shares. In other words, whatever steam that the company enjoyed that you can see on the chart may no longer be there in the short-term future. Over the past 52 weeks, the price fluctuated between 15 cents and $7.85. The volume of shares traded tells us how many shares are being bought and sold at any given point in the market, and if there's enough liquidity to support such a trading strategy. If the float is thin, it would be very easy to influence the stock price, but low liquidity could mean that the demand is limited too. When we compare the current volume against the average one, there might be the possibility for a trend reversal or breakthrough if the difference is very large. For example, if the stock were to break through, then the current volume could be significantly higher, than the average volume. So the market cap of Faraday Future is currently around $260 million versus the enterprise value of $363 million. Now, as we compare the current price to the historical price fluctuations, the stock is around 30% higher than the 1 month low, 60% higher than the 3 month low, and 60% higher than the 52 weeks low. On the options market, which often gives us a hint about the market sentiment, like on where the stock price, the stock price is, and the implied volatility is around 294% compared to the historical volatility of 193%. The put call volume ratio is around 0.02, and it's normal for many stocks to also tend to have a higher put option volume than what they deserve because many institutional investors hedge their long positions by buying put options. The most recent volume of options traded is around 4.5 thousand contracts a day versus the 30-day average of 9,000. In terms of the open interest, the most recent volume is around 262,000 contracts versus the 30-day average of 263,000. Regarding the shareholder structure, that by the way is very surprising. Institutional shareholders still hold somehow 11% of the outstanding float. I mean, hats off to those people, I guess. The biggest shareholders include BlackRock, Vanguard, and State Street. I'm not really sure why they're in Faraday Future. Maybe they think that it's a marginal position, like a moonshot position, that may or may not take off, so they might as well just throw in a Kopek. Usually, it's best to see some institutional participation in holding a long-term stock. It offers a layer of stability. Now, in this case, it means that for the most part, the shareholders are here for the short-term gains. They're here for the in and outs, which really corresponds to what our assessment is regarding Faraday Future to begin with. The current short interest is around 28% of the total float, and 65% of the transactions are coming from the dark pools. Now, if it's above 15%, we can make a case that the short interest is sufficiently high to say that there might be a concerted short operation. It shouldn't be really surprising with Faraday Future. I mean, even if there is, I'm not sure how much of a pressure 28% is to push for a short squeeze. I mean, if it were like 40%, then I may say, yeah, we're probably going to have one. But at 28%, it's something to keep in mind, but I'm not sure how much of it is going to pan out positively for those who are hoping for a short squeeze. I believe that Faraday Future is a position to be had only if the risk appetite is very high and that you're comfortable with trading short-term penny stock positions for quick gains. Now, it's also very important that you need to be very disciplined in the exposure so that even if the position doesn't meet your expectations, the potential losses are still well within what's tolerable. On the other hand, if the goal is to find a company to invest in, then this company may not offer the best potential for the future. Ultimately, the name of the game as far as Faraday is concerned is to see whether there will be any sort of volatility in the upcoming future. There's little to no reasonable expectation regarding whether they can become profitable. I think it's quite obvious at this point that it's going to take quite a sea change for us to see that. I would recommend to commit between 0.5% and 1% of your portfolio in Faraday Future, and to recommend to split it in batches of at least 20 to 30% of the allocation at a time over the next 3 to 6 weeks.